Hi, I'm Stan The Annuity Man, America's annuity agent, licensed in all 50 states. This is part of my Fixed Index Annuities series that I've done on the product that I hope is really going to help the consumer understand what's being pitched out there. Before you do anything, you need to get my book, The Indexed Annuity Owner's Manual, that I'll send to you for free and under no obligation. Also go to my site at theannuityman.com to schedule a call with me one-on-one to see if an indexed annuity actually fits. They're commodity products. I represent pretty much every single carrier out there, so we can talk about whatever you've been pitched, or we can take a look at what might make sense for you. I also have a podcast weekly called Fun with Annuities you might want to check out. I've done great podcast on this topic. I'm a writer as well for some of the major platforms. Currently I'm writing for The Street, and I've written some good articles on indexed annuities as well. But today we're going to talk about income riders attached to indexed annuities. You know, why, when, how, what, does it make sense? Right after this. So what is an income rider? First of all, that's one of the books I'm going to send you if you go to theannuityman.com and sign up for my books there. But an income rider is an attached benefit that you can attach at the time of application to the vast majority of indexed annuities. What does it do? It provides a future lifetime income stream of which you can decide when to turn it on. So just visually, if you draw a line down a blank sheet of paper, this is the indexed annuity, two separate calculation. This is the index option side, which, by the way, I did a great video on that, going over the caps and the spreads and how that works. I'd encourage you to take a look at that. Now, the income rider is this other calculation on this side. Two separate calculations. The income rider is for the lifetime income benefit. It's a monopoly money, a phantom account that you cannot use for anything but that. Or in some cases, you can also use income riders for, some of them offer confinement care benefits and death benefits. We're going to talk about that in a couple seconds. But let's talk about the income part of it. The income rider, typically with an indexed annuity, grows by a specific percentage. Say sounds like Jimmy Carter's in office. It's like 5 or 6 or 7 or 8%. And you're going, wait a minute, Stan, that sounds fantastic. Something growing at 7, 8%. Remember again, that side is monopoly money in a phantom account that can only be used to calculate your first lifetime income payment. That doesn't make it a bad thing. It's good if you're looking for future lifetime guarantees, like if you're going to defer for 5 years or 7 years or 10 years. We'll quote all carriers to see who has the highest contractual guaranteed income rider, and you can set it up joint with a spouse or partner so that if you pass away, then the income continues uninterrupted and unchanged for the rest of their life. Now, the good part about income riders attached to indexed annuities is if you die, if your Learjet hits the mountain, whatever's left in that accumulation value, that cap spreads, that option side over there, call option side, that goes 100% to the listed beneficiaries on the policy. Okay, so that's the income side of the income rider. But income riders can do more than that. Some of them can. And if you say, Stan, you know, I want it to offer a death benefit, or I want it to provide some confinement care type benefits, we can shop for those. Not all income riders provide that, but let's go through kind of how they work. For instance, if you said, Stan, I want an income rider that also is a death benefit. Once again, drawing a line down a blank sheet of paper, accumulation value side here, income rider here, some of the products will grow by a certain percentage, and you can use that as a death benefit. Side note, the best death benefit on the planet is still life insurance. Yes, these are life insurance policies, but the death benefit from an income rider on an indexed annuity is going to be taxable to your beneficiaries. But for people that can't qualify for the underwriting of life insurance, it makes sense to maybe look at a death benefit rider in conjunction with that income benefit so that you can leave money to your heirs. Now, the other thing about income riders you need to know, and part of the bad chicken dinner sales pitch is, hey, you get this income rider and you get free long-term care. Number one, that's not true. Okay, long-term care is a health insurance product. What they're trying to pitch you is what's called confinement care or enhanced benefit. And what that really means is when you get sick or you're in a home and there's specific rules for qualifications for this, it's guaranteed issue underwriting, but the rules involve when that enhanced payment's going to come. But what you need to know is this. When you can't do 2 of the 6 daily functions of life on the enhanced benefit type riders, they're going to increase that income stream. On the confinement care, if you're in a facility for a specific period of time, and each one of these riders has different types of rules, they're going to increase that income stream. Why are they doing that? What you're in essence doing with a confinement care enhanced benefit rider attached to that income rider, part of that income rider, is you're proving to the insurance company that your life expectancy is actually less because you're not well, and they're going to pay you back more money. But understand this, you're just getting your money back quicker when you get sicker. That doesn't mean it's a bad benefit. That just means they're going to enhance and increase that payment because you need the money because you're not feeling well. You're in a confinement care facilities or you're getting some home care, etc. But there's currently, at the time of this taping, there's probably less than 20 companies out there that offer an income rider with confinement care or enhanced benefit type payouts, and we'll look at all of them for you. I'll explain them to you. We'll quote them all for the highest contractual guarantee. But understand that that is a benefit. It's not too good to be true, but it's pretty good if you understand the limitations and the benefits. So let's go broad picture once again with income riders. Income rider can provide a lifetime income stream at a future date, and it is customizable. And we need to quote all carriers to find the highest contractual guarantees for your specific situation. There's not one that's better than the other, in my opinion, and I am the top agent out here, licensed in all 50 states, including yours. You can also buy them that have a death benefit, and you can also buy them that have a confinement care type benefit as well. So, in conclusion, income riders attached to index annuities, they make sense if you're looking to contractually solve and transfer the risk for those specific items, but you don't have to attach an income rider. That's your decision at the time of application. Okay, so I've come up with this acronym. Here's my sign. Yes, I have signs to make it easy. PIL. What's that stand for? Let's look at it. P stands for principal protection. In an index annuity world, the principal is protected. It's a fixed annuity, okay? I stands for income for life. Income riders, it provides income for life, right? L stands for legacy. Some of these income riders can provide a legacy from a death benefit standpoint. Again, life insurance is still the best death benefit out there because it passes tax-free to your beneficiaries. But if you can't qualify for that, if you can't go through the underwriting, that L for legacy, you can buy an index annuity, guaranteed issue, attach that death benefit rider. We'll go find the best ones for you. If you go to my site at theannuityman.com and contact me, I'll shop all carriers for the best death benefit rider out there for you. And then the other L is legacy/confinement care. And again, income riders can be purchased so that they provide that lifetime income stream and provide some confinement care benefit as well, especially if you can't qualify for long-term care, because long-term care is a health insurance product. You had to be underwritten for that. And a lot of people out there can't qualify. Remember, annuity companies have the big buildings for a reason, right? They want to insure healthy young people. And so these type of products and index annuity, I mean, it really kind of solves for the pill. That doesn't mean you need to buy it, but the pill, once again, principal protection, income for life, legacy, long-term care/confinement care. And the reason I put long-term care is that's how people categorize it in their head. But with these income riders, it's confinement care, enhanced benefit. But depending on what you want to solve for, I would encourage you to contact me. Let's go through every single policy. Let's shop for the highest contractual guarantee so you can make an informed decision. All right, I know we went through a lot. I encourage you to get my book, Fixed Index Annuity Owner's Manual, at theannuityman.com. Hit subscribe, hit the bell so you can get notified. Isn't that the bell, producer? I think it is. And watch this other video. I've done a series, so I'm pointing to the other video within the series on fixed index annuities. Appreciate you joining me. See you next time on Stan The Annuity Man YouTube channel.